Hello, and welcome back to Ajayastromoneyguru, your source for the latest updates and advanced analysis on various commodities. Today, we are diving into the world of sugar, where we've got some interesting developments to discuss. So, without further ado, let's jump right into it. Our first story revolves around ICE raw sugar futures. They've been making headlines, consolidating just below a 12-year high. This consolidation comes as a result of short-term supply bottlenecks in Brazil, which have cast some doubt on the nation's massive harvest prospects. But that's not all, there's more brewing in the sugar world. India's sugar production is expected to decrease, and Thailand is considering imposing restrictions on sugar exports. Thailand's decision is driven by a 20% increase in domestic sugar prices, making sugar a controlled commodity. This move aims to control inflation and ensure food security. It would require a regulating panel to approve Thailand's sugar exports of a ton or more. Moving on, we can't ignore the impact of crude oil prices on the sugar market. Higher crude oil prices are encouraging millers to divert cane crushing for ethanol, which is limiting sugar supplies. As a result, ICE sugar futures for March delivery have been quite dynamic, hitting a 12-year high of 28.00 cents last week and ending with a 1.8% gain. Now, let's take a look at the global perspective. The International Sugar Organization, ISO, recently released a global sugar production forecast, indicating a 1.2% fall in production to 174.8 million metric tons for the October to September 2023-24 period. Furthermore, a global sugar deficit of 2.1 million metric tons is expected, which is quite a significant gap. And what about Brazil? In the first half of October, Brazil's Center-South sugar output saw a remarkable 22% rise compared to the previous year. The 2023-24 crop year through mid-October saw an even more impressive 23.6% increase in sugar output. It's worth noting that a higher percentage of crushed sugarcane is being used for sugar production this year, which should help stabilize sugar prices. It's clear that sugar prices have been on quite a roller coaster this year, hitting their 12-year nearest futures highs. Concerns are arising due to smaller global sugar production, with India potentially restricting sugar exports and Thai farmers leaning towards more profitable crops like cassava instead of sugarcane. Weather events are also playing a crucial role. The El Niño weather event is expected to impact major Asian producers, particularly India and Thailand, further affecting sugar production. In the United States, the USDA has lowered its projection for sugar production and reported record high tier imports. Meanwhile, in China, a leading sugar consumer, forecasts for sugar imports remain steady, suggesting growing demand. And it's not just about Brazil, other nations are making predictions too. Germany's refined sugar production for the 2023-24 season is forecasted to increase by nearly 13% from the previous season. In the European Union, sugar output is expected to rise by 3% thanks to changes in beet acreage. Lastly, we have Indonesia, where white sugar output is anticipated to decrease by 4% due to adverse weather conditions affecting harvests. Before we wrap up, let's take a quick look at the financial aspect. Funds have been adjusting their positions in raw sugar futures, with some reducing their bullish bets, suggesting a changing sentiment in the market. So, there you have it, folks. That's the latest in the world of sugar commodities. It's an exciting and ever-changing market with various factors at play. As always, stay tuned to Ajayastromoneyguru for the most up-to-date analysis and insights on the commodities market. Thank you for watching, and until next time, happy trading.